Hello and welcome to Nandon. So we'll check out the next structural reforms which was undertaken by the government. So after the introduction of economic reforms over a period of time, the country's growth rate picked up. The foreign exchange reserves of the country also increased. So the government gradually introduced other structural reforms in the form of demonetization, introduction of GST, the Make in India program. So all those things were introduced by the government in the later period. Okay. First, let us check out the demonetization. So now what is the meaning of demonetization? So it is a situation in which the central bank, that is the Reserve Bank of India, in our country it is Reserve Bank. So the central bank, that is the RBI, withdraws the old, or you can see the say it is existing currency notes of certain denominations. From circulation. So they no longer will be, whatever the currencies that are withdrawn, they no longer will be the legal tender money. That is, they cannot be used for the for making payments. So those currency notes cannot be used for payments. So they will no longer be the legal tender money. So they cannot be used for making the payments. So recently in the sense that in India, on November 8th, 2016. So our Prime Minister announced that the central government announced the withdrawal of 500 rupee note, the existing 500 rupee notes and the 1000 rupee notes. So announced the withdrawal of existing rupees 500 and rupees 1000 currency notes from the circulation of the country. So what happened? People could no longer use them for making as a payment. So these currency notes, they ceased to be the legal tender money. So in its place, the government introduced new currency notes of 500 and 1000 rupee notes denominations. So the government introduced new rupees. So people had to go to the bank and exchange their old 500 rupees and 1000 rupees notes for a new currency notes of 500 and 1000 rupees notes, because old currency notes were no longer be accepted as a mode of payment. Now, what is the purpose of introducing the demonetization? So there are two reasons. So the demonetization was introduced or announced, whatever you might call it as, announced for two reasons. One is to flush out the black money, So all the illegal money has to be checked. So this is a better way of flushing out all the black money that is being in circulation in the country. And another reason is to move towards cashless economy. So to move towards a cashless economy. So these are the two reasons for which the demonetization is being announced by the government. Okay, and this is not the first time the demonetization is being announced in our country. So if you look at the history of demonetization in our country, so earlier history of demonetization in India. So first in 1946. So in 1946, the then government announced the withdrawal of rupees 10,000. That time, the 10,000 rupees notes was there, which was the highest denomination note. So the 10,000 rupee notes, which was the, I can highlight this also, the 10,000 rupee notes, which was highest denomination note, was demonetized. But of course, it was later introduced in 1954. So 1946, almost for 10 years, that currency was not in circulation. So though it was later reintroduced in 1954. And again for the second time in 1978. So again, all right, in 1978, the then government they introduced an act called, they introduced the high denomination banks act. So the denomination currency are having the high denomination. Some of the high denomination currency notes have been demonetized during that period in 1979, 78. Okay, that is the demonetization. And they declared currency notes of rupees 500, rupees 1,000, and again the 10,000 rupee notes as illegal. So now November 16 was not the first time the Indian government had been demonetizing the currency, but that was the recent one. The currency was some of the currency notes were demonetized in our country. So when you look at what is the effect, or what is the whether the government has achieved its objective of flushing out the black money or into moving towards a cashless economy. So the analysis of demonetization of the latest one, November 2016. So it has been said that more than 90% of the withdrawal currency, the black money, had come back into the circulation. The RBI itself has admitted. So looking at it, the purpose for which the government had demonetized the currency notes didn't serve its purpose. Okay. So based on the analysis, the government's effort of demonetization on November 2016, it actually failed its objective of flushing out the black money from the system. Because none other than the RBI itself has admitted about the influx of all the withdrawal currency notes to the extent of 99%. So that itself proves that government has failed in its objective. So the RBI on August 30th, 2017, in its report clearly mentioned that this is a report of RBI. 99% of the banned notes came back into the banking system. So this tells maybe it was a cashless economy. We were much better, slightly moving towards that. But then when it comes to the flushing out of the back money, the demonetization did not serve its purpose. Okay. So you will get a question. This is for 5 marks. You will get a question. Write a note on demonetization in India. Okay. That anyway, that's after the economic reforms. Once the country started witnessing economic growth, the government announced some of the structural reforms. The first one was the demonetization. So this was the effect of the demonetization. So the next structural reforms which was introduced by the government is the goods and service tax, that is the GST. Goods and services tax. After the demonetization, before its effect was clearly over, the government immediately announced the goods and service tax also. Okay, so GST, popularly known as the GST. So the GST it is an indirect tax. The main feature of this feature or the advantage of GST is that there were so many taxes in our country. Different varieties of taxes had been imposed both by the central government as well as the state government. And government wanted to remove all those taxes and replace all the taxes with one single tax for the entire country, that is the goods and service tax. So GST, so it is an indirect tax. So GST is one indirect tax for the entire country. So which is basically levied on supply of goods and services. Goods and services, replacing many indirect taxes that were existing in our country. Okay, so it was the GST Act was passed in the Parliament on 29th March 2017. The Act came into effect on 1st July 2017. So November 8th, 2016, demonetization was announced, and immediately 1st July 2017, the government introduced the GST. Okay, the main objective of GST is to, so the main objective of GST is to remove, this is the objective of GST, is to remove there's something called as the cascading effect. So the cascading effects of taxes and also to keep a check on all the unorganized sector. So they're all evading the taxes, mostly the unorganized sector. They are evading the indirect tax. So the taxes on goods and services. So in order to keep a track on all the unorganized sector by regulating it. So now what is the meaning of this cascading effect? You see, when too many taxes are imposed on a particular commodity, see normally what is happening, it is there's something called a value added tax, isn't it? See, for example, at the time of, for your information, so let us assume tax is levied on a raw material. Okay, there is a this is the first stage, and then once that raw material turns into an intermediate good, then again another tax is levied. This is the second stage, and then from the intermediate, there are, it is not that just straight away raw material to intermediary goods and final goods. Even in the raw intermediary goods also there are different stages. So maybe to do 2 or 3 stages of intermediary goods, then only becomes the final product. So for the time being, let us assume first stage is raw material, the second stage is intermediary stage, intermediate good, and the third stage is the final good. So then again, one more time, the tax is levied. So there are multiple levels of taxes. So fine, that is the cascading effect. So tax upon tax. So that is a cascading effect. Already tax is levied on a particular commodity. Again, one more tax is levied on the same type of commodity. So that is what is called a tax on tax, is called as the cascading effect. So what is happening, this cascading effect, so it is affecting both the consumers as well as the producer. The cost of production is increasing. It is affecting, the price level will increase. So it is affecting both the consumers as well as the producers. That is one problem. And another problem is too many taxes in different stages. So levied. So it is confusing for everyone, especially for the dealers, for the producers, for the wholesalers, for everyone it is confusing because too many taxes are levied by the country. Different varieties of taxes at different stages. It is a multi-stage taxes. So that was the existing tax structure in our country. So on the one hand, the tax upon tax is increasing the tax rate finally, which is the cascading effect. And because of the different taxes at different stages of production and sales, it is again confusing to all the dealers, to the producers, and finally the consumers also have to pay high amount of tax. So in order to avoid all that, the government wanted to replace all those different varieties of taxes with one single tax, that is what is known as the GST. Okay, so now this is the uh, purpose of introducing the GST. So you will get a question, 5 marks. Why is GST introduced in India? This is the reason, the main objective, to avoid the cascading effects. So why is GST introduced in India, and what it state the impact of GST on Indian economy? So you'll get a 5 marks question. So this is the reason the GST is being introduced. Okay. Now let us move on to the, what are all the components of GST? Components of GST. So there are 3 taxes applicable under this system. Applicable under this system. Okay. So the first one is the central goods and service taxes. So this is CGST. So this tax is applicable to all those transactions. So this tax is applicable to the transactions done within state boundaries. Within state boundaries or at something called as intrastate level. See, if you are reading your textbook, there is a mistake there. In your textbook, it is given interstate. So it is not for a CGST, it is not interstate, it is intrastate level. So within the state boundary means intrastate. Okay. Between the states means interstate. Please understand that. So there is a printing mistake maybe in your textbook. So it is not the interstate, it is the intrastate level. So if the transactions of goods, the sale of goods is happening within the state level, then the CGST is applicable. And this CGST is levied along with, if it is a state, if the transaction is happening in a particular state, then it is levied along with SGST, or if the transaction is happening within a union territory, then it is levied along with the UTGST. So CGST is levied along with the SGST and the UTGST if the transaction or the sale of goods is happening within the state, that is the intrastate level. Okay. So this CGST replaced, so earlier we had taxes like, so CGST replaced taxes like central excise tax and service tax. So these taxes were merged with the CGST. So that is the first type of tax. Then the second one is the SGST, that is state goods and services tax. So this is SGST. So along with that, union territory, because the concept is the same. If it is the goods are transacted, transaction is happening within a state, it is SGST. If it is happening if that is called as a union territory, then in the UTGST. So the concept is the same. So union territory, goods and services tax. So this is the second type, UTGST. Okay. So this tax, so this also, if it is happening within the state or within the union territory, this tax is applicable. So like CTGST, that is a central goods and service tax, this tax is also applicable to those transactions, done within the state boundaries, or if it is a union territory, it is within the union territory, or again the mistake, it is an intrastate. If it is happening, the transaction is happening within the state, it is called as the intrastate. Okay. So this is, and this SGST replaced or merged all the other taxes like, so replaced or merged. I mean, you can say those earlier, whatever the taxes which we had, some of the taxes like, so we had like VAT, that is the state value added tax, entertainment tax, luxury tax, entry tax. So you can see how many number of taxes were there. So entry tax, etc. So all these taxes were merged with SGST, or SGST replaced all these taxes. Okay, that is the second type. And the third type of tax is the IT. The third one, integrated goods and services tax, popularly known as the IGST. So integrated, so this tax is applicable between the states. So it is applicable to those transactions done between different states. Done between different states. So now this is the interstate level, or at the interstate level. So those two are intrastate, within the state. This is between the different states. And apart from that, it also applicable for and also on import of goods. Okay. So these are all the three types of GST, the components of GST. See, let me explain to you with an example so that you will understand the concept clearly. Suppose, so I'll give you an example. So let us assume, example, a trader, let us assume, a trader from Telangana. Okay. So a trader from Telangana has sold goods to a customer. So if he's selling a customer in, let us say, some other state, say for example, Tamil Nadu. Okay. So Tamil Nadu, worth rupees, let us assume 5,000. Okay. So then in this case, what type of tax is available? This is between two states, Telangana and Tamil Nadu. So it is an interstate transaction. So in this case, which tax is applicable? IGST is applicable. Okay. So IGST will be applicable in this case because it is between the two states. So, okay. So what is the reason? As the transaction is an interstate transaction. So let us assume the GST rate maximum rate is it is 18%. So if it is 18%, then the seller, the trader will charge how much? He will charge 18% on 5,000. Then the trader will charge 5,900. So this 5,900, out of which this rupees 900 will be going to whom? To the central government. So initially it will be going to the central government, and later this 900 will be split between the central government and the state of Tamil Nadu. So that is the final destination. GST is always levied at the level of consumption, not at the level of manufacturing. Okay. So here the final destination of the commodities is Tamil Nadu. Okay. So initially it will be collected by the central government, and later it will be split between the central government and the state of Tamil Nadu. So this is IGST. Okay. Suppose, let us assume suppose if the trader in Telangana if a trader in Telangana sells goods, again let us assume goods worth rupees 5,000 to a customer within Telangana itself. So this is an interesting to another customer within Telangana. Then in this case, it will be which tax is applicable here. So then SGST will be applicable. So again, we are assuming 18%. So GST, let us assuming 18%. So out of that 900 rupees, it will be split between the central government and the state of Telangana. So here the final customer is also in the Telangana itself. So it will be rupees 450 to central government and again rupees 450 to state government, that is the Telangana. So instead of Telangana, so this is if it happens to be any union territory, then will be 450 to central government and rupees 450 to union territory. So that is the UT-GST. Okay. So now I think you understand clearly. So even though there is a rule, I think GST for SGST should not be more than 14%. But anyway, this is only an example. So this is how the goods and service taxes are being imposed and distributed, shared between the central government and the state government or the union government. Okay, so you will get a question, as I mentioned, what is the reason for introducing GST and what are its impact on the Indian economy. So it's the second part of the question, its impact on the Indian economy. I will explain to you in my next class. Okay, so if you find this video useful, please like, share and subscribe. And if you have any doubts, please mention in the comment box. Okay, so until my next class, take care. Bye bye.